Ever open QuickBooks and have no idea where to even start? By the end of this video, you'll be able to set it up, run your daily books, and read your numbers with total confidence. No accounting degree required. Let's get into it. Here's why this actually matters. QuickBooks automates the busy work, but if you don't understand what it's doing behind the scenes, you're flying blind. Get this right, and you get real-time financial clarity, way fewer costly mistakes, faster decisions, and skills that transfer to literally any accounting software out there. First decision: online or desktop? QuickBooks. Online lives in the cloud. Access it from any browser or your phone, with automatic bank feeds built for freelancers and service businesses. QuickBooks Desktop installs locally, works fully offline, and has deeper tools for inventory-heavy businesses like manufacturing and retail. If you're not sure, online is the safer default for most people starting out. Before you touch the software, you need 3 ideas in your head. 1. The accounting equation. Assets equal liabilities plus equity. Every transaction has to keep that balanced. 2. Debits and credits. Every entry touches 2 accounts. Debits increase assets and expenses. Credits increase liabilities, equity, and income. 3. Cash versus accrual. Cash basis records money when it moves. Accrual records it when it's earned or billed. QuickBooks can run either method. Setting up your company file right on day 1 saves you hours of cleanup later. Enter your company info and pick an industry template. Set your fiscal year and accounting method. Connect your bank and credit card accounts. Build or import your chart of accounts. Add your customers, vendors, and opening balances. And invite your accountant as a collaborator so nothing gets missed. Every single report you will ever run comes from 5 buckets: assets, what you own; liabilities, what you owe; equity, the owner's stake; income, money you've earned; and expenses, the cost of running the business. Keep your account names consistent, because messy naming is the #1 cause of ugly, confusing reports later. Once you're set up, the dashboard is organized around 5 daily workflows. Banking, where you review live transactions. Sales, where you create invoices and get paid. Expenses, where you enter bills. Customers and vendors, where you manage every contact and balance. And reports, where you pull your numbers in seconds. Here's the money in cycle. Create an estimate, convert it to an invoice, send it to your customer, receive the payment, and deposit it to the bank. Behind the scenes, every invoice debits accounts receivable and credits income. That's double-entry bookkeeping happening automatically. Pro tip: turn on automatic invoice reminders in your sales settings to speed up collections. And here's the money out cycle. Enter the bill, categorize it to the right account, schedule the payment, pay the vendor, and match it to your bank feed. Categorization is everything here. A bill filed to the wrong expense account quietly distorts your profit and loss until somebody catches it. Use classes or tags to track spending by project or department without cluttering your chart of accounts. This is the monthly ritual that keeps your books trustworthy. Review your bank feed daily or weekly. Don't let it pile up. Match transactions to existing invoices and bills first, then categorize anything left over. At the end of every reconciliation, your target difference should be 0. If it won't reconcile, check for duplicate entries, a missing transaction, or a typo in your opening balance before you assume the bank is wrong. If you only ever check 3 screens, make it these: profit and loss, income minus expenses over a period, telling you if you're actually making money, balance sheet, assets, liabilities, and equity at a single point in time, what you own, versus what you owe. And the statement of cash flow, because profit on paper is not the same as cash in the bank. If you have employees, payroll is where accuracy really counts. Classify people correctly, employee versus contractor, changes your tax forms entirely. Let QuickBooks Payroll automate the tax calculations for you. Run payroll on a consistent schedule, and always reconcile your payroll liabilities to confirm what you withheld actually matches what got remitted. A few habits that separate confident users from confused ones. Set up bank rules to auto-categorize recurring transactions. Create recurring invoices and bills for predictable revenue and costs. Attach receipts directly to transactions so you're always audit-ready. Use undeposited funds correctly when matching batch deposits. Check the audit log instead of guessing when numbers look off. And close your books every month so nobody can accidentally edit old transactions. And here's what to avoid. Mixing personal and business expenses in one account. Deleting transactions instead of voiding them. Ignoring your bank feed for weeks at a time. Creating duplicate customers or vendors. Never reconciling your credit card accounts. And skipping backups before a big cleanup job. So here's your whole roadmap in one line. Set up right, record consistently, reconcile monthly, and read your reports. Master that loop, and you're not just running QuickBooks, you understand accounting, period, which means these same skills carry over to Xero, Sage, Wave, or whatever your next job throws at you. If this helped, subscribe for the full step-by-step walkthrough series.